Hey everyone, we got some huge news for NEO stock investors in this video here. The company announced that it's proposing offering $1 billion of convertible senior notes. It's going to offer 500 million in aggregate principal amount of convertible senior notes due 2029 and 500 million in aggregate principal amount of convertible senior notes due 2030. So what does this mean for NEO stock investors? Well, firstly, let's start with what a convertible note is. A convertible note is a debt instrument, right? It's a borrowing from the company that gives the lender an option to convert the debt into stock. So the lender has the option now to convert this debt into shares of stock. Now, why would the lender do that? Only if the stock price rises from the current price it is today, right? Otherwise, it won't be in the lender's interest to convert to equity. The lender will keep it debt and will receive the principal amount repayment in 2029 and 2030 of 500 million each. So this gives the lender an option to participate in the upside of the business while also protecting it from the downside of the business by saying, well, if the stock price were to fall and it doesn't increase between now and the time of the notes 2029 and 2030, then the lender will just keep the debt and receive the payoff. So it's a way to decrease the risk for lenders and provide it some upside. And so it also decreases the cost of the capital from NEO's perspective because it's providing the lender with the upside. And if you're providing the lender with the upside, then you're borrowing the money at a lower cost because the lender likes having that upside. And so for investors, what this means is potential shareholder dilution, meaning if more shares are outstanding, that means the profit or the price, the earnings that you'll receive per share is likely to decrease, because it's going to be split among more shares outstanding. So existing profit split between more shares means a stock price, unfortunately, that's going to be lower. And that's what you saw after this announcement. NEO's stock price was down by nearly double digits because investors are anticipating the dilution, and so they're willing to pay a lower price per share for NEO stock. I'll compare it to pizza, right? If you buy a bigger slice of pizza, you're willing to pay more for a bigger slice. But if that same pizza says, okay, now we're going to sell you this slice, well, you're going to be willing to pay less per slice. Even if you think that's an incredibly tasty pizza, you're willing to pay more for that bigger price per slice than you are for the smaller slice per slice. And so that's what's happening with NEO stock. This price is decreasing because the slices are getting smaller. And so investors are saying, okay, if we're going to get a smaller slice of this pizza, we're going to pay a smaller price. And so it has nothing to do with the fact that NEO's going to utilize this money to grow the business, invest in new research and development. The company, remember, in its latest earnings call said that they're investing in expanding their sales network because they're far behind competitors in their sales staff. So they're increasing their sales staff to support the launch of these new models they just put out into the market in recent months. So it could very well be the case that the company uses this money effectively to grow the business, but that's regardless of the fact. The stock price will fall in the aftermath of these types of announcements because what you're doing is decreasing the slice, the size of the slice. And so investors automatically will be willing to pay a lower price per slice because those slices just shrunk. All right, so that's all for this video. We got some massive news for NEO stock investors.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.